Today, Friday the 21st, is the last full trading day before the Christmas period. There is a half-day trading on Christmas Eve, but it doesn't look as if we're going to have a quiet close to Christmas. The fiscal talks in the US broke down last night, or hit a stumbling block, and the first chart of the day is a daily chart of the S&P 500 index, and I think it's worth just looking at the sort of reaction that was seen. These futures opened at around 1 o'clock UK time in the morning, and we saw about a 3% move in the space of literally seconds. We can see it rallied quite significantly, maybe half of that particular fall, but it shows the level of volatility that possibly we can expect in markets as we approach the sort of deadline of the end of the year for trying to break down some sort of agreement. Needs watching. This move happened when volumes are very thin, but of course as we go into the Christmas week we can expect to see quite sort of lower volumes across global markets, and so just needs monitoring during that period. On some slightly more positive news though, as it is the last podcast for 2012, it is worth just looking at some of the markets that are performing very well. Overall, global stock markets have had a good year. In fact, some of them have been on quite a charge. We're seeing gains of around 15 to 30% that was experienced in the DAX during 2012. Our own FTSE 100 really lagged behind that. Its gain of about 5 to 6% as we currently speak is well shy of some of those better markets such as the US and many European markets. And I suspect that's because we have a few too many oils, telecoms, pharmaceuticals that haven't really performed well this year, and a few of the industrial cyclicals which have really taken the best of the market for this year. Saying that, the FTSE 250, which has a more representative feel of what I refer to as the domestic industrial economy, this is an interesting chart. It's an all-time high, was breached this week. We can see here by this chart. This chart is actually a chart that dates back to 1986. So to put that sort of chart into some sort of context about the move, we can see that it sort of breached a high in 2007. Obviously came off quite sharply, but now we've resumed that sort of uptrend, and that is through an all-time high. So certainly a chart worthy of some attention. Now, just in terms of some domestic news, currencies for me will be very interesting in 2013. With all of the work that's going on by central banks across the globe, we have to look out for what I refer to as the unintended consequences of this action, and it will, I think, manifest itself in the currency markets, and so movements in currencies, I think, could start to shape the way that the economies around the globe are going to sort of continue to evolve out of the crisis. This chart shows the pound against the dollar, and it's hitting a year high. This is the yearly chart, and we can see there that it has breached out, trading at about 163, so giving up some of those gains that we saw to the competitiveness of the UK economy. The devaluation since 2007 took the pound dollar down from, say, $2 down to about $1.50, $1.40 at the lows, and as a result we were becoming more competitive in the export markets. Well, this is one of Mervyn King's key problems at the moment, is if sterling has a spike up, but across the globe we do know that many countries are trying to reduce the value of their currency. We'll come back to that a little bit later. In terms of the euro is finishing on a little bit of a high. This is around the 132, so it all seems peaceful in euro land at the moment. In terms of just to turn to sort of 2013, Killik and Co, we've given some thought to some of the themes that we're looking at for next year, and really just briefly, this note is available for distribution, so if you ask your broker for a copy. But in terms of a FTSE 100 forecast, last year our FTSE 100 forecast was 6,100. It looks like we'll come in a little bit shy of that. Whether or not we'll get over 6,000 by the year end is still it's a close run thing, but 6.1 was our year end target. For 2013 2013 it's 6,500, and that would represent about a 10% move on the market, leaving the market on a forward P ratio of about 12 and a yield of 3.5%. In terms of asset class, one area that we think could be of interest next year is the smaller companies market. This is the all-share index, which is the sort of key measure for the sort of universe of stocks that we look at in our special situations area. And this again has had quite a decent year, but we do think there continues to be some attractive assets in the smaller cap environment. Typically small companies trade at premiums to the larger companies, representing their higher growth. But we reckon that unlike the last 10 years, where it's traded at about a 9% premium, at the moment it appears they're trading on about a 9% discount to their larger. So there has been quite a swing in those particular assets. In terms of markets to look for, okay, one for the brave, but Japanese equities. We have been looking at this story for a little while, recognising what's going on with the currency, recognising what that could happen to the exporters, and we are seeing at the moment quite a strong move in Japanese equities, but we still feel that particular trend has some way to run. So that is one group that we're looking at. We refer to soft commodities. Don't be short of soft commodities. We're looking at the corporate bond market and reminding everybody to keep a close eye on the duration of bonds that they buy at the moment and have some control over duration of the bonds. The mobile internet continues to be an investment theme for us, and this final chart from me is that movement on the Japanese yen that we've seen over the course of the last 2 months. As I mentioned at the start, I do think that currency moves next year could be one of the big themes for 2013.